Most people believe the world they were born into is the way the world has always been. We assume the US dollar will always buy our groceries. We assume the West will always set the rules. And we assume that the world order is a permanent, unchanging fixture of reality. But history has a brutal way of correcting our assumptions. Every 100 to 150 years, the global financial operating system crashes. It happened to the Dutch in the 1700s. It happened to the British in the 1900s. And right now, in 2026, the echoes of those collapses are getting louder. Between a $38 trillion national debt, the rise of a massive new economic bloc, and the sudden weaponization of global trade, the signs are no longer just theories. They are mathematical facts. Is this the start of a new world order, or are we just living through another echo of history? To find out, we have to look at the big cycle. To understand where we are going, we have to look at how we got here. Financial history is not a straight line. It is a cycle. Think of it like the life of a star. It starts with a massive burst of energy, usually after a major conflict. The winner of that conflict becomes the world reserve currency. In 1945, that was the United States. We held 80% of the world's gold. We had the only intact manufacturing base. So the world agreed the dollar is as good as gold. This created a long wave of prosperity. But like every empire before us, the privilege of having the world's money comes with a hidden trap. Imagine you are at a high-stakes poker game, but you are not just any player, you are the house. Because you are the house, everyone trusts your chips more than anyone else's. In fact, people start using your chips to buy drinks and food outside the casino. Because everyone wants your chips, you realize you can start printing more of them without actually having the cash in the vault to back them up. At first, it is great. You live like a king. You expand the casino and you lend chips to everyone. But eventually, the players notice something. There are millions of chips on the table, but the vault looks a little empty. They start asking to cash out. To keep the game going, you have to promise even higher returns. Or worse, you start getting aggressive with the players who want to leave. This is exactly what happens to a global reserve currency. It starts with the golden age, moves into the debt binge, and ends with the crisis of confidence. In 2026, we are no longer in the golden age. We are deep in the debt binge. For the first time in history, the interest payments on US debt have surpassed the entire defense budget. That is not a political talking point. That is a mathematical reality. History has a favorite ghost that haunts the halls of every central bank. To see the future of our current economy, we have to look back at Amsterdam in June 1772. At the time, the Dutch Republic was the financial center of the world. The Dutch guilder was the dollar of its day. The Dutch had developed what they called exorbitant privilege. Because their currency was so trusted, they could borrow money at the lowest rates in Europe. This cheap money led to a massive speculative bubble. Bankers began channeling funds into high-risk negotiates, essentially 18th century mortgage-backed securities tied to sugar plantations. At the heart of this system was the Dutch East India Company, or the VOC. It was the original too-big-to-fail corporation. By the 1770s, the VOC was burdened by massive debt and administrative rot. When a major London bank collapsed after a bad bet, it triggered a contagion that spread across the English Channel. Imagine a massive suspension bridge. The bridge is the global financial system, and the two main pillars are trust and liquidity. For decades, everyone has driven their trucks across this bridge because it is the only way to get to the market. Because so many people use it, the bridge owners start adding heavy ornate decorations, statues, extra lanes, and massive offices hanging off the sides. But they stop maintaining the pillars. Over time, the pillars start to crack under the weight of the decorations, which, in our world, is national debt. One day, a small earthquake hits. On the normal bridge, this would not be a problem, but because this bridge is so overextended and the pillars are so brittle, the cracks begin to zip up the cables. In 1772, the statues were plantation mortgages. In 2026, The statues are the $38.5 trillion in US national debt. When the world notices the pillars are cracking, they do not just stop driving on the bridge, they start looking for a new one entirely. If the US is the house at the poker table, a new group of players just sat down, and they brought their own chips. Enter BRICS. For years, this was just an acronym for emerging markets, but by 2026, it has transformed into a formal economic bloc that controls over 35% of global GDP. The real threat to the world order is not just growth, it is infrastructure. Since the 1970s, the US has used the financial nuclear option, the ability to kick countries out of the SWIFT payments system. It worked against Iran, and it was used against Russia in 2022. But when you use weapon too often, the world looks for a shield. Today, we are seeing the birth of that shield. China's SIPS system is now settling trillions in yuan. India is settling oil trades in rupees. Saudi Arabia, the cornerstone of the petrodollar, is now officially accepting multiple currencies for its energy. This is not just a political statement, it is a structural bypass. If you are enjoying this video, make sure you subscribe to our channel so you keep getting the knowledge of history and money simultaneously. If the world does not need the dollar to buy oil or settle trade, the exorbitant privilege of the US printing press begins to evaporate. Now, before we conclude that the New World Order is a done deal, we have to address the most powerful argument against it. To be a serious analyst, you have to admit that the US dollar still has a moat that is incredibly hard to cross. Critics of the collapse theory argue that there is simply no viable alternative. Yes, China's GDP is huge, but would you rather keep your life savings in the Chinese yuan, a currency controlled by a government that can freeze your assets overnight, or the US dollar, backed by a 250-year-old legal system? Even in 2026, roughly 85% of all global trade is still invoiced in dollars. The US has the deepest, most liquid capital markets in the world. If you are a billionaire in Dubai or a pension fund in Norway, and you have $10 billion to park somewhere safe, you cannot put it in the South African rand or even the Indian rupee. Those markets are too small. You have to buy US treasuries. Furthermore, a world order is not just about money, it is about message and muscle. The US still leads the world in artificial intelligence, aerospace, and military power until a competitor can offer a safe legal system, a massive bond market, and global security. The dollar remains the least bad option in a messy world. As the saying goes, the dollar is a house with a leaky roof, but everyone else's house is currently on fire. But here is where 2026 feels different. Most people think a new world order is a conspiracy theory. In reality, it is a construction project. To replace a world order, you do not just need different ideology, you need different pipes. You need a way to move money, data, and goods that the current superpower cannot turn off. On January 13th, 2026, India took the chair of BRICS. While the headlines focused on diplomatic handshakes, the real story was the BRICS CBDC bridge. For 80 years, if a company in Lagos wanted to pay a supplier in Shanghai, the money had to travel through a bank in New York. It was slow and expensive. In 2026, that middleman is being deleted. With central bank digital currencies, a trade can settle in seconds. No SWIFT, no New York clearinghouse. This is the structural bypass. If you can move money without the dollar's role as a weapon disappears. But it is not just money. It is the three pillars of sovereignty. First, financial sovereignty. The M-Bridge system has settled over $55 billion in transactions early 2026. Second, digital sovereignty. Russia has begun serial production of the SVET satellites, a direct competitor to Starlink, providing a BRICS internet. And third, physical sovereignty. While India was hosting summits, Chinese and Russian warships were docking at the Cape of Good Hope. Why? Because as the Red Sea became volatile, southern tip of Africa became the most important choke point for global trade. They are signaling that they, not just the US Navy, will protect the goods that move via their new digital payment rails. So, Where does that leave us? History tells us that transitions do not happen in a day. The British pound did not lose its status because of one war. It lost it because it became too expensive. To maintain an empire with too much debt, we are on a period of financial echoes. The $38 trillion debt is the internal rot. The rise of BRICS is the external pressure. Whether it's 2026 or 2036, the facts show that the unipolar world, where one country calls all the shots, is ending. We are moving into a multipolar world. This is a world where there are multiple houses at the poker table, each with their own chips and their own rules. For the average person, this means more volatility, more complexity, but also more options. The transition is usually messy, and it always rewards those who see the pipes changing. Before the rest of the world notices the water has stopped flowing, the world is rewriting its code in real time. The question is, will you be a user of the old system or an architect of the new one? I have detailed the sources of the 2026 fiscal data, the BRICS stats, in the description below. If you want to stay ahead of these money echoes, make sure you are subscribed, and I want to hear from you. In a world of many currencies, which one would you bet your future on? History does not just repeat, it rhymes. So make sure you are listening for the next money echoes. Subscribe, and I will see you in the next one.